What's going on, everybody? Lots and lots of sad bears today. RIP to our fallen brethren. If you guys have been watching my YouTube videos, I hope that none of you guys were one of those sad bears today, because we give day-to-day updates on the stock market. And yesterday I shared that the RSI was oversold, meaning below 30 for the first time since March 2020. Okay, so that was a big reason why we bought into dips. I post all my plays on Twitter, and today these were a lot of the plays. All of them worked out, and Mara actually went up all the way to 100%. So lots of plays ended up working out. We made a bunch of plays during the day as well. So overall, the dip buying opportunities worked out phenomenally. Right? So in today's video, we're going to go over the stock market, the bond market, and the crypto market. So without further ado, let's get started with the video. And I just want to say thank you guys for all of your support, your likes, your subscribes, your comments. They all, they really mean the world to me. And if you guys really enjoy the channel, please subscribe to the channel and also put on bell notifications. That would really help. So here is a chart of the NASDAQ. So yesterday was a beautiful dip buying opportunity in the entire market because the RSI was oversold on the NASDAQ for the first time since March 2020. So that was one clear indication that we were very overextended to the downside, right? Number two, yesterday, we closed outside of the lower level of the B band, right? So that is another huge opportunity to get into short-term calls for a aggressive bounce, right? And then number three, we were sitting next to a very important level of support, and I also posted on Twitter during the day. So multiple reasons why we had such a strong move and strong rally today, and they all really worked out. So now, what does this mean for the market? All right, number one, we closed on the QQQ exactly at the 38.2% fib level, which is not the best sign. What we wanted to see is a very strong close above this level, right? But instead, we had a close of 357.38. We closed exactly on that level, right? So, I mean, that's not the best sign, but another good something to look at is that the MACD has still not crossed above yet. So there's still tons more room to the upside on the NASDAQ, which is very bullish, right? And we held this support level very nicely as well. So that is really important, right? But then the other thing that we need to understand is the bonds, right? So the 30-year yield is actually very important when we're talking about what's going on with the stock market. So right now, things are looking really terrible for the 30-year yield. We can see that the MACD crossed above, right? But the 30-year yield's price is actually falling. So usually when the MACD does cross above here, that is supposed to be a bullish signal, right? But the fact that we closed lower as this is happening is not a good sign. Especially, you can see the RSI is also lower. So the fact that the 30-year yield is falling like this is not bullish at all, and it makes me wonder whether or not we're going to actually fall down even lower, right? And potentially we can fall down much lower because the Bollinger Bands are much further away now from where we closed. Okay, so there's lots more room to the downside. The 30-year yield looks very bearish, and of course, if you've been watching my videos, you understand that when the 30-year yield goes down, then the NASDAQ goes down. And when the 10-year yield goes up, then the IWM goes up, okay? So right now, there's clear divergence in what is going on with the 30-year yield and the NASDAQ. So you could argue that we just bounced because we were so overextended in terms of equity price. But in terms of the bond market itself, the NASDAQ has not factored in a potential collapse of the bond market yet. So essentially, if we start to close and cross down below 158.22, which is this nearest term support, and we really start to fall down to 156 or 157, then the NASDAQ can really, it could be really detrimental for the entire stock market in general. Let me just go ahead and share some downward targets that some hedge funds and banks would be looking at. So one important level that many people are going to be looking at is the 200 moving average on the NASDAQ, as well as, you know, the SPY. But currently you can see the distance between the 200 moving average as well as, you know, the price of where we are. It's about 4.6% away. All right, so this move here was approximately only an 8% drop. So another 4% from, you know, where we were, that's going to be a total of maybe a 10 to 11%, right? And usually, you know, bigger drops, you know, have happened where we did fall, you know, 11 or 12%. So if we did fall back down from here to the 200 simple moving average, that would be only an 11% drop. So that is still very doable and possible that might happen. But of course, we're going to be trading it day to day. But longer term, you know, if the 30-year yield does start showing weakness, you know, we can really fall. But of course, the nearest term levels of support that need to hold is this uptrend level here on the Qs, and then, you know, 350 essentially, which is a very important psychological level. The resistance levels are 357.38 and 367. So we need to see if those levels can be broken above. So for now, I mean, it all just really depends on the 30-year yield. So now we should definitely take a look at the 10-year yield to see the potential strength in the IWM as well as the value sector. So you can see now that the 10-year yield is still, like, today was very bullish for the 10-year yield. And, you know, that is not the best situation because, you know, we showed that much weakness in the 30-year yield. But, you know, the 10-year yield increasing like this is basically showing us that investors and banks are still more inclined to go after riskier assets and riskier investments. So the reason why the 30-year yield is falling like that is because investors want to take on more risk. And when the 10-year yield goes up, it means that people are taking more risks, and essentially they want shorter term returns. So this going up is supposed to be good in the short term, essentially, for the stock market. And but the issue with right now what's going on is that the 30-year yield is collapsing so fast that the fact that we're falling this fast, it's basically counteracting the strength that should be in the market currently, right? But overall, when the 10-year yield does go higher, right, specifically it should be very good for the IWM, because the IWM benefits from the 10-year yield increasing the most because of the banking sector. And banks get the most, you know, bang for their buck when the 10-year yield is going up. All right, so let's take a look at the IWM. So the IWM held above 221 very well as well, but it failed to cross above and close above this very important resistance here at 221.84, as well as this very important resistance at the 50% fib level at 222. So we wanted to see much stronger closes on both the IWM and the NASDAQ, but that did not happen. We had rallies during the day that we did, you know, make a lot of money on, but we didn't close in the best ways. So that is the only issue here, coupled with the 30-year yield showing so much weakness. All right, so now let's go ahead and take a look at the SPY. So the SPY closed in a much more decent manner. We closed above this uptrend line once more. We reclaimed the channel, right? And we closed above the 23.6% fib level at 432.72, right? So the SPY showed the most strength, primarily due to crude oil, you know, breaking out, right? Because there's a lot of energy stocks and oil stocks in the SP 500. So the SPY showed the most strength in terms of the way it closed. Okay, so right now the SPY's MACD is also oversold. The RSI is moving upward, And it looks like, you know, technically we did close above multiple levels of resistance. So that is a good thing. Real quick, I want to look at the MACD on the IWM. And you can see that that is also looking like it's about to break above. So there is still potential, lots of room to the upside for the entire market overall, for the main three indices, right? But the only issue is that the 30-year yield is vomiting, and the NASDAQ and the IWM did not close in the most bullish ways. But the SPY did close in a very good manner, right? So, I mean, overall, there's not much else to really look at in terms of the stock market. That should be it. Now, I guess we could take a look at the dollar, and then we could go and take a look at the crypto market, right? So real quick, the dollar goes up usually when the stock market is falling, but there is a discrepancy here today. It means that, you know, investors are not, you know, entirely sure of this movement upward in the stock market, which is why the dollar went up as well. That's what I'm taking from this movement upward, right? But overall, there's not much to really tell on the dollar. You can still see that we are uptrending, and it means that there's still perceived weakness in the equities market if the dollar is continuing to rise like this. Yeah, so not much else to talk about in terms of the stock market, but the crypto market in Bitcoin is really, really skyrocketing. So everyone was waiting for a dip, and if you think about it, maximum pain to retail traders is when traders want a dip, but a dip never comes. So especially since crypto is very, very manipulated, it's very easy for people to manipulate the price higher, especially if they have the capital to back up the movement, right? So Bitcoin is skyrocketing, and the only issue is that now it's starting to creep outside of the upper level of the B band, right? We did have such a huge move upward that now it looks like there might be some resistance here at the 53,000 level. But I mean, the fact that we're above 50,000, I mean, we saw the bullishness. We saw the bullishness in the in Bitcoin in general, especially the weakness in the stock market. So my calls, you know, our calls that we got into on Mara, those were amazing, because once the market had a little bit of a bounce, Bitcoin already showed so much strength. So Mara was up 9% today. So yeah, I mean, yeah, overall, Bitcoin looks amazing. Ethereum is definitely, you know, lagging behind. Ethereum still has tons of room to the upside in comparison to Bitcoin, but both now seem like they are going to, you know, be breaking out. But I do think Bitcoin does need somewhat of a retracement soon. We're starting to get overextended out of the B bands. In terms of the moving averages, you know, we aren't that overextended. We did cross above the 10 over the 200, and the 10 moving average is also looking to cross above the 50, which is also bullish. But we just need to wait and see if we will consolidate to a better price point to buy, and then look for a dip. Because if you guys aren't in Bitcoin or any crypto right now, this price is not the best price to buy at. You want to buy on dips. All right, so just wait for that. And overall, I mean, just hodl. And yeah, we could see a dip back down to 49,114, which is the 61.8% fib level. So if you guys enjoyed the video, I hope you guys did. I hope you guys learned something. We're, you know, just navigating the markets every day, and things have been going really well. If you guys enjoyed the video, please make sure to comment or, you know, subscribe, follow, do all that good stuff. Thank you guys so much for all of your support and love, and I will see you guys tomorrow. Thank you.